Hello, friends. Welcome to this special episode. So, in this episode, we are going to bust some myths around index investing. Um, the typical conversation between two people. I want to invest in the top 50 stocks in the Indian market. Any product that you can suggest. So, the friend is saying that, of course, go ahead with any Nifty ETF. It gives you exposure to all 50 stocks, and that is the best way to do investing in index stocks. So all good, you may think, but there is a issue. Are you really getting fair exposure to all the 50 stocks is the question. So if you go to the Nifty index weights, and this is from the Nifty NSE website. So as of March 2024, you can see that the weight of the stocks in the sector uh, is 33% for financial services, 13% for IT, almost 13% for oil and gas, 8% for FMCG, 7.5% for autos, and then it drops suddenly 4.5% for construction, 4.5% for healthcare, 3.7 for metals, 3.2 for telecom, 2.92 only for consumer durables, 2.9 only for power, 2% for construction materials, 1% for all services, and this makes up the 50 stocks, of which you can see that the bulk of the stocks are right here, with the total weight also being at the top end. So if you just take the top three sectors, the top three sectors are 21 stocks, making up almost 60% of the overall weight. So just 20% of sectors occupy 60% of the weight here. And if you see the last uh, 10 sectors going from number 4 to number 13, you can see that 80% of the overall sectors, so 10 out of 13, uh, occupy only 40% of the total weight. So you probably have now by now understood that the Nifty composition as it is extremely lopsided, where 80% of the sectors of the economy are only being given 40% weight, and 20% of the sectors are being given 60%. Now, even within the top three sectors, 40% of all stocks, so 20 stocks out of 21 stocks out of 50, are in just 23% of all the sectors, 3 out of 13 in Nifty 50. So very, very concentrated weights in very specific sectors of the index. And if you see the bottom seven sectors, then bottom 54% of the sectors have a mere 20% exposure in the Nifty 50. I mean, imagine power, consumer durables, and services, they just add up to 6 or 7%, which is a very significant part of index investing. So is this index investing really good then? That is the question to be answered. Is that, mindlessly we can say that, okay, we are doing index investing, but is the index designed to give you, the what you are looking for? You are looking for a product where you would have an exposure to the economy as a whole, not to a product which is very, very concentrated on very few sectors of the economy. So the intent of your query, the first question that the friend asked, is that I want to invest in the economy in index stocks. But the answer is that, okay, you can invest in index stocks, but there is no product which will give you a fair exposure to all these stocks. So now let's dig deeper into the data and see what we can find. You very well know by now that these special episodes are purely data oriented, and my team really puts in a lot of effort uh, to do this. I'll appreciate if you can subscribe to the channel and give a like. They will be really delighted to see more and more people getting connected. So in the last 1 year, for instance, now last 1 year performance, the top 10 weighted stocks in Nifty 50 versus the bottom 10 weighted stocks in Nifty 50 versus the top 10 performing stocks in Nifty 50. Let's compare all this. So I hope you've got this segregation right. First category is the top 10 weighted stocks. Weights, the stocks which have the most weights. The next category is stocks which have the least weight. The bottom 10 weighted stocks. And then third category is which are the 10 top performing stocks in the last 1 year. So let's see this categories. Top 10 weighted stocks. So these are the top 10 weighted stocks of Nifty. HDFC Bank rules the table here at 11.86%. Reliance Industries at 9.4%, ICICI at 7.6, Infosys at 5.9, ITC 4.24, Tata Consultancy 4.09, L&T 3.9, Axis Bank 3.3, Bharti 3.2, and State Bank of India 2.88%. These are the top 10 Nifty weighted stocks today, of which returns of HDFC Bank in last 1 year 0, Reliance Industries 16, ICICI 20, Infosys 26, ITC 8, TCS 20, L&T 35, Axis 20, Bharti Airtel 65, State Bank of India 43. So if you can see Bharti, State Bank, Larsen, possibly Infosys, these are the real sort of stocks that have really performed in the last 1 year. And because of their performance and their weight, what is their contribution to Nifty? Zero contribution to Nifty from HDFC Bank. 1.59% by Reliance, 1.56% by ICICI Bank, 1.6 by Infosys, 0.34 by ITC, 0.84 by TCS, 1.38 by Larsen, 0.68 by Axis, 2.1% by Bharti, and State Bank of India 1.2%. This is the contribution because of these weights and these performances. So even with a 65% performance of Bharti Airtel, it has only been able to influence the Nifty by 2%, right? And even with a 20% or 26% uh, uh, performance, because of 5.94%, Infosys has been able to influence by 1.6%, right? So you can see that despite such a huge outperformance here on Bharti, the impact on Nifty is almost similar. Let's move forward. Now let's look at the bottom least weighted stocks in Nifty today. Which are these stocks? L&T, LTI, Mindtree, Divi's Lab, Apollo, Eicher, BPCL, HDFC Life, Britannia, Hero Moto, Wipro, and SBI Life Insurance. These are the weights, all about 0.4 to 0.66% weights. 1 year returns, Mindtree nothing, Divi's Lab 29, Apollo 32, Eicher 41, BPCL 85, HDFC Life 8.7, Britannia 24, Hero Moto 70%, Wipro again 16, SBI Life 27. So now what you can see, really big outperformers. PPCL at 85%. What is the contribution to Nifty? 0.5%. Hero Moto 70% individual performance, contribution to Nifty 0.45%. Eicher Motors 41%, contribution to Nifty 0.25%. So virtually no contribution to Nifty despite some performances because of low weights. Now let's look at top 10 performing stocks in Nifty 50 without bothering about their weights. So these are the top 10 stocks in the last 12 months. Coal India, Bajaj Auto, Adani Ports, Power Grid, ONGC, NTPC, BPCL, Mahindra, Hero, and Tata Motors. Returns ranging from 67% to 125% in the last 12 months. Weights ranging from 0.64 of Hero Moto to 2.38 of Mahindra, and all the way in between. Contribution to Nifty, most of them contributing more than 1%, 1.4, 1.6, 1.4, 1.135, 1.07, 1.54, and so on and so forth. Despite such humongous returns. So 125% return in a year, but the contribution to Nifty is only 1.4%. So the idea here was that we wanted to, participate in the economy, look at which parts, which sectors of the economy did well in the last 1 year and benefit out of it. But what are we actually getting? Nothing out of it. So just to sum this up, uh, top 10 weighted stocks, total weightage is 56% in Nifty. Bottom 10 has only 6%. Just see the gap. Top 10 stocks weighted 56%, bottom 10 weighted only 6%. And the top 10 performing are at 13.25 today. It will change with each year. Now let's take average. Let's take average returns of the top 10 weighted stocks. Listen to this very carefully, please, and try to understand it. This is the average of the returns of the last 1 year of the top 10 weighted stocks in Nifty 50, all the big ones, HDFC, Reliance, and so on and so forth. The returns is 25.79. The bottom least weighted stocks have performed much better at 34.15%, and the best performing Nifty stocks top 10 in terms of performance is 89.8%. So the heavyweights did average of 25, the underweights did average of 34, and the stocks that are could be heavyweight or low weight or middleweight but top in performance did average of 89.83%. I'm sure you are now getting the flow of where we are getting at, that contribution to the Nifty in last 1 year because of these stocks, average returns 11.3%. Contribution to Nifty because of these stocks only 2. Despite being having average of 34% return, contribution to Nifty is only 2%. And these stocks, which could be heavyweight, low weight, or middleweight, have contributed 11.73%. So what can you see? Overall returns of Nifty last year approximately 25%, very, very close to what this cohort has delivered. 25.79% average with only 11.35 out of this 25 coming from this cohort. This cohort, despite being low weighted, despite having fantastic average, fantastic average returns last year, and because of low weights, has contributed only 2%. So unfortunate. And this cohort, super duper performance of nearly 90% average, but because the weights are 13% only, has delivered only 11.7 to the Nifty. So all put together, 25% return, because one side is extremely heavyweight, one side is extremely low weight, and we have to go by these weights. So what are the statistics to note here? The top 10 weighted stocks, which is 20% of the stocks, hold a staggering 56% of weight in Nifty 50. Top 10 performing stocks contributed only 11.7% to Nifty 50's 25% gains in last 1 year, despite them clocking an average of 89.8%. This is very, very key. What if you just held those 10 stocks? Your returns in that index would have been 89.8%. Bottom 10 weighted stocks have outperformed the top 10 weighted stocks, yet they have not contributed anything to the Nifty because of their poor weights. Now you tell me, is this the right way to do index investing? Index is there, index, there may be discussion about whether this index is rightly formulated, or is it extremely biased towards certain sectors? Of course, it is a market cap weighted index, and there is some policy by which the but if you are an investor and you are taking a call on India, let's say for the next 3 years, next 5 years, maybe some of these heavyweight sectors will not move. There could be, periods of time when some of these heavyweights will not move. Some of the underweights may be super performing, like we have seen in this last 1 year. Nobody was focusing on public sector banks. Nobody was focusing on public sector enterprise stocks, but they're the ones who are zooming. Coal India, BPCL, I can rattle off so many names. So the right way is not to blindly follow the index weights. The right way is to follow stocks that are performing. And you could make your product equal weighted. You could make your product selective, that out of these 50 stocks, if 10 are performing, 10 are extremely underperforming, and 30 in the middle are sort of nowhere, then I just want to go with the top 10. Why should I bother about this set of 40 stocks, which is neither here nor there, which is not contributing to my returns? So my whole idea is that I should be able to invest in the index stocks, so that there is reliability in terms of the quality of stock, the size of the stock, the general management quality at that level of stocks. But I don't want to get stuck with the weights which the index committee is telling us, right? Because that weight is going to take decades or years to change gradually. But right now, if some sector is performing and you are only giving it 1% weight, why should I not participate in that sector with a full weight, so that I can make the most of my investing into the index stocks of the economy? So please give thought. Index investing basis the weights given by a specific index agency, or index investing basis equal weights, or index investing basis the best stocks out of that index that you can pick and run in your own strategy. Let me know your thoughts on this entire data that you've seen. Maybe some of you would have expected it. Some of you may have gotten your eyes opened about this today. Index investing has its flaws. I'm not saying you should not do it, but please be aware of what you are investing into. Thanks. Bye.